even before the day begins for the United States traders, we are seeing the talks of reversal for the Dow Jones Industrial Average, and this is because we have these more than 2 percentage point declines in the key equity indices in the euro area, and the influence of that can also be seen on the US equity index futures. All the three key equity indices index futures for the United States are trading in the red with losses of more than 1 percentage point. And if we consider the technical formation, I think bearish head and shoulder pattern is forming for the Dow Jones Industrial Average, and this is a reversal of sort from the medium term to not from the longer term, we can't really say, but from short to medium term perspective, this is you can say topping out for the Dow Jones Industrial Average. So we will be looking for the trading opportunities in light of these changing circumstances. If you consider the data docket for the day, we had these initial jobless claims for the United States for last week, the week ended 3rd of July, and the numbers are a bit higher. For this week, it stands at 373,000 compared to the expectations of 350,000. And I think not much of an impact was seen on the currency side or on the equity side, as we have these tumble in equities and the USD JPY already. So I think in light of that, we didn't really see any fresh impact. And on the commodity side, we are scheduled to get the inventory data for the light crude oil. And this week, we are expecting the light crude oil inventory to decline by more than 4 million barrels after the prior week's decline of around 6.7 million barrels. And if we were to look at the chart, I think some sort of bounce can't be ruled out. But here also, in the technical sense, the reversal is shaping up, and I'm not really expecting any big move on the upside, even if we get these numbers as expected. So now let us begin the technical segment, where we will cover the Dow Jones Industrial Average first, and after that we will also see what are the formations suggesting for the light crude oil. Let's start with the Dow Jones Industrial Average technical outlook. This is the daily time frame chart, and in the initial remarks when I said that the head and shoulder formation is taking shape, that this is what I refer to. If you observe these highs, these are pretty much identical, just little below 35,000. And this time around, the reversal has been fairly sharp. First time, it was equally sharp, and in last month, in the second half of last month, we had this decline, but initially it was pretty slow, and only incremental losses were seen before picking up pace. But this time around, the losses are quite pronounced in today's session. Even before the day begins, the US equity future indices are trading lower, and we can expect some acceleration of sort on the lower side. And in the day itself, I am expecting the possibility of 34,000 level being tested. So we will have to be mindful of that. And any trade, if it is to be taken on this level, should be preferably on the shorting side. But that is a difficult proposition given the fact that we have the Dow trading on the lower side and this high, which can be utilized as a stop loss level, is not really close. So that is going to widen the stop loss if you want to jump right in. And if you are patient enough, then I think we can consider some optimum levels which will get us the good risk reward ratio. If you consider the technical formation, the regression curve still remains inclined on the higher side, but the price action has dropped below this lower band. So moving forward, in a day or two, we can expect the regression curve to flatten a lot more extent, and eventually, if the price doesn't really recover, then the inclination will be on the lower side. But as the things stand, I'm kind of cautious here for shorting on the current levels, as we have this central pivot point around 34,200, and that can be expected as to provide some support on the lower side. But by the support, I don't mean that we should be going for a buy trade. Given the pace of this decline, we will have to allow the price action to settle first, and only after that we can make the fresh assessment. Right now, it is a case of a falling knife, and it is better to go with the flow. But our job is to make money, and for that, we do need the optimum levels to be kept in mind whenever we are going to initiate the trade. So for that, the price area of interest is going to be around 34,500. We have these three key SMAs converging closer to this price range, and the prior swing low was around the same price level. And given all these factors together, I am expecting this to be major resistance on the higher side, and as long as price action remains below these key resistance, the price area of around 34,500, we can be fairly confident of our stance of going short in the Dow. And the stop loss can be kept just little above this immediate high of around 34,700. So that high can be utilized as our critical marker, and the price area of around 34,500 can be considered as a price area of interest here. And if we do get the entry closer to this, then I think the risk reward ratio looks a lot more favorable than going for a market open on the current prices. Moving on to the commodity side, let us consider the light crude oil's technical outlook. This is the daily time frame chart, and just a couple of days back, when the light crude oil was rising, I had talked about the continuity there, and it did rise. But after that, after rising to this 161.8% Fibonacci expansion, it has shown a sharp reversal, and now it has gotten closer to this 100% expansion, and I'm expecting it to find some support on the lower side closer to this price area. If you consider the prior price rise, this is where some minor correction happened before picking up the pace and rising all the way towards USD 77 per barrel level. So I think moving forward, the stance has changed to now bearish. So it will be prudent for us also to keep up with the trend and start looking for the bearish trading opportunities. But we do have to keep in mind what are the key resistance and support levels, and then try to optimize our trading setup accordingly. If you consider the regression curve, it has started to incline on the lower side. So this is one more confirmation factor which can be utilized. And if you consider the central pivot point, the price has shown the signs of even dipping below this immediate support. So both these factors go on to show that the reversal is taking hold, and we can expect the light crude oil prices to remain in this bearish trajectory for at least next couple of days. So our job is to go looking for the optimum entry, and to that extent we can utilize these three SMAs which are converging closer to the USD 74 per barrel level as our area of interest, the price levels, which is going to get us the optimum risk reward ratio. We have this prior swing high around the same area, and then this sharp reversal, sharp decline on the lower side. Now, if you consider the today's session, as I said, we are scheduled to get the inventory data, and in that, if we see the drawdown as per the expectation, we can't really rule out move on the higher side, even if turnouts to be short-lived, and we should be counting on that. And if we are fortunate enough to get the entry as close as possible to this resistance zone, then I think our risk will be a lot more sharper, we can keep the stop loss just little above this prior swing high, yesterday's high. So the stop loss anywhere around USD 75 per barrel or little above that should be good enough for any trade to be taken in the light crude oil. But currently, the light crude oil is trading far from those levels, and that is of course going to widen the stop loss if we were to jump in straight away. So rather than that, I would say that play it cautiously, allow some time to pass, and after that, even if we have to wait for a day or two, we should do that. And after we get the optimum entry and exit point, we should get involved for shorting the light crude oil. But currently, given the backdrop of this reversal, this sharp decline, which is already there, I'm expecting the light crude oil to spend more time in consolidation rather than moving sharply on either side. But if we get some sort of move, at least some sort of retracement on the higher side, and get us closer to the this convergence zone, then that should be welcomed, and that opportunity can be pounced on. So that's my take looking at the current technical formation of the light crude oil. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. You can check out the Lucoscopy Analytics page for the further coverage of the market developments. And if you want to start trading using the JForex platform, do let me know if any help is needed. The links are provided there. You can also follow us on the Facebook. See you next time. Till then, goodbye.